One of the funnest things that I enjoy doing is seeing billionaires just constantly battling it out over products, the company's trajectory, if it's even a legal company. I mean, Sam Altman trying to get a refund on his Tesla, complaining that it's been over 7.5 years to have Elon clap back. I mean, it's been a crazy weekend, hasn't it? I mean, we had the Jays game, kind of a disappointment there, but still really cool to watch for a guy that's not a Jays fan. We had Halloween, and here you are. You're going to sit down and we're going to talk about dividend tax loopholes and answer your comments and questions over the week when I'm incredibly exhausted trying to finish up laundry and I desperately need a haircut. But hey, we'll make some time for you guys because it's been a little while, hasn't it? And I've noticed some of you pointed that out, and maybe we'll talk more about my streaming schedule toward the end of this, because the markets have been nothing short of continually astonishing with some hiccups here and there, which we can get into. But I really just want to dive into this very specific topic because I feel like every single person that gets into investing, it starts incredibly innocently, right? Like you just realize you have income, you got expenses. Your income's got to be higher than your expenses. So you only have those two bars you can play with. Either I can make more money or I can try and spend less money, whether it's, buying a used car, making coffee at home, which, always making that coffee at home, and trying to maximize that profit so you can invest it to fight toward that period of financial independence, right? And that number is a little bit different for everybody, I'm sure. But the final boss of all investing, I really think comes down to your partner in crime. Unfortunately, it's not your wife, it's the government. And at the end of the day, she's the one that's going to take the biggest check from you, right? Like you're going to be paying her at a hell of a lot more than your wife's probably ever going to take, unless you're like Bezos's wife. Then we could have a different conversation about this. But one of my favorite nerdiest things to do, and I can't believe I figured all this stuff out. I'm honestly shocked. I talked to my mom about this sometimes, and it's just like it's not like I enjoyed learning this. I just recognized that if I could figure this out without having to pay thousands of dollars to a lawyer, and I just talked to a bank advisor and I used Google before these chat GPTs even existed, that the amount of money that I would be able to save and perpetuate would be god awful. And a guy that understands compound interest that drives a $7,000 2016 Hyundai Accent, is making six figures a year and still makes coffee at home. I don't know. I take this far too seriously and far too far. But those little bits, man, you can save $5,000-$10,000 doing something like this. It could equate to hundreds of thousands of dollars by the time I'm 60. If we can make that long, pray to God. But I just want to show you this is one of my favorite things. Is just this employment calculator. You can pick it for your own province, and if you live in the U.S., I'm sure you can find an income tax calculator. But I just want to remind you that if you make $80,000 of employment income, you're going to pay about $20,000 in taxes. If, on the other hand, you make $80,000 in eligible dividends, you're only going to pay $1,000 in taxes. And this is kind of, I think, a backward-handed incentive by the Canadian government to get you to invest in the economy. Yes, it comes with an incredible benefit, but I also don't want you to detriment your portfolio, because you'll notice I'm not a guy that desperately chases yield. But this is barely the brink of understanding how the rich avoid paying major taxes, because again, this is just dividends. And obviously you have to build up a massive portfolio to be getting $80,000 in eligible dividends. Heck, you need 1.5 million, even a million, you'd still need to be making 8% off that, right? So, I mean, you're going to need a pretty awful amount of money, but same with capital gains, right? If you're making 100K in capital gains, yeah, so you're paying $7,000 in taxes. I mean, how much is that on 80K and comparably? 80,000, so 5,000. So you can see eligible dividends are one of the most premier way to bring income in. And let's just do a quick comparable to ineligible dividends. Let's say you're not getting an eligible dividend. Yeah, you're going to pay a substantial more, about 8,000. So you can see that the government just says, hey, if you're going to support Canadian businesses, we'll give you a massive tax break. And if you're fortunate enough to make $1 million in your lifetime, you just jam it all into VDY, XEI, what's the other one? XDIV, whatever the other one is there. I mean, you're probably going to be doing pretty well from not ever having to pay the government for the rest of your life. Regardless, however, I don't really recommend this path. It's not something that I really pay too much attention to, because again, at the end of the day, you just want to maximize some of that profit, right? But we'll come back to that in a moment, because I want to remind you that the tax game we're playing here is so different from that salaried income. Because again, what we're comparing the income to here is just basically your employment to the dividends that you're making. And you can judge whether those are the right investments outside of tax advantage accounts. If you're using your TFSA, your RSP, I'm not here to really get into all of that. You guys are probably well aware of that. It's the final boss of investing that I want to talk about, especially in the Canadian economy, that I just can't get over how much money I'm saving this year on. I run my taxes pretty much every single month. Because obviously, like, if you run a business, like, I'm the one paying attention to it. I don't want to like overpay an accountant to go through my finances. So I just kind of look at my expenses, deductibles, see what my channel and kind of my self-employment income is bringing in. But I just can't get over how little tax I'm paying on that money. And I just want to remind you guys, in Ontario, the small business, it's called the Canadian Controlled Private Corporation and the small business deduction, where you're only going to pay 12.2% this year on $500,000. You make $500K, you're going to pay 12.12%. That is your tax rate. So on every 100 grand, you're paying, $12,000, right? To put that in perspective, like, if you were to make $500,000 of employment income here, guys, you're going to be paying $227,000. Comparably, let me pull up my handy dandy calculator here. If I can share that with you here real quick. I mean, what's the difference here if we do 12,000 times that 500K? You're going to be paying $60,000 versus $227,000. And this is just the brink of the insanity here, because this isn't talking about the deductibles before you pay that tax. But the reason I'm saying this is you get this massive tax deduction, and then you get to do this incredible thing, right? Where you basically get to roll it over. And if you wanted to buy Canadian dividend stocks, guess what? You don't pay any tax on any qualified dividends. This is where things get really interesting to me. I can't believe this is a reality. So if you could make $500K in a corporation, you're going to pay like a quarter of the amount of tax. And if you roll that, and again, this is, I know, a stretch for a lot of people. We're really talking about the upper percentage of income earners. I'm just talking about the extreme. And most people shouldn't even start a corporation unless they're probably making about 50 to 100K, because you're not really going to be getting the best, tax advantages until you're in those upper brackets. It's kind of like taking advantage of an RRSP, in my opinion, to some varying degrees. But regardless, tax-free flow is what we're talking about here. A Canadian corporation paying another Canadian corporation a dividend waives the tax, because the government says, hey, we're not going to double tax you because that one company already paid the taxes on that income, and then they gave it to another company in Canada. So we ain't going to make you pay double tax. And then you know what you do if you're really smart? You take those dividends and you just use them towards your write-offs. So that way you're like paying some of your personal and business expenses through just free dividends. Like, it's kind of hilarious, really. I mean, there's a lot of ways you can take advantage of it. You could pay it out to yourself as a dividend. You're going to get taxed on that, obviously, but there's a lot of weird things you can do. And I've come to realize the formulation in my head is like the best possible setup any Canadian could have is having a side hustle while having a job. If you can have a salaried income, pay into your CPP and pay into all that stuff, and then also have a side hustle where you're making a reasonable amount that you can sock away in a corporation that you can use to greatly reduce your tax costs on parts of your house. I mean, I write off 1/6 of my property because I'm using this room for this business expense, travel. I mean, I'm using my phone, a lot of my meals, obviously lunch, when I'm eating at work here in my office at home, which is beautiful. All of that comes into this play of corporations make the money first, they spend the money, and they only pay tax on whatever's left. And it's just so mind-blowing to me that, a lot of people point to some of the discrepancies, and they're going to point that this is a problem and that is a problem. But Canada wants you to be rich. I have no reason to doubt that Canada wants you to be like they just want you to be rich if you know how to work the system, right? And not in a legal way. Like, this is all 100% legal, which is crazy to me, right? Like, it just blows my mind. And the thing that goes even beyond this, and this is what I do for my business, and I'm perplexed that this is a reality, is that if you sell digital services anywhere in the world, let's say the United States, you can make US dollars. Those US dollars come over to this country. They go into your bank account. You do not pay any over-the-border withholding tax. It's considered digital services, right? So you end up getting this capital. And in Ontario, we typically have this like 13% HST charge you have to do with transactions. You don't have to do it with US income, right? And then you get the US dollar. You can take the US dollar and invest the US dollar into US businesses in your corporation and just focus toward capital gains, which don't come as tax efficiently, but there's other things you can do down the road to take advantage of, your corporation's assets. I don't know. It's just crazy. Like, it's just nuts how, like, over time this stuff starts to like accumulate. It's like putting a brick in a house. They say, like, you got to start with that one brick and another brick. And then, I've been doing this for 11 years, and all of a sudden, like, I'm like, holy crap, this is this is a lot, man. This is kind of like overwhelming to understand. And then like, if you really get like crazy with it, start a social media business. You can travel right off your travel expenses. I see TikTok stars doing it all the time, which blows my mind. Like just writing off trips. I mean, if you're going on a $5,000 trip and you can write that off, like, I mean, how many people, like, what's your tax bracket on that 5,000? It's probably going to cost you, a normal person working for a salary, like 7 or 8 grand to go on that 5K trip. Not in my business. It cost me 5 grand, right? Like, it's kind of crazy. But regardless, this is the world we live in, folks. I was just kind of like reiterating this on this channel because I feel like too many people kind of get swallowed into this idea that, you know, Canada is not an efficient place. You're never going to get rich here. It's horribly suppressive. I got to leave this country. I swear, like, you can operate like independently, like you're a nomad in this country, work around the world digitally, and get paid in foreign currencies at a deductible, like an actual deducted rate. The government just wants you bringing that money in, man. They don't care. I mean, there was that bit of a fight with Google and Canada with Trump there when they were talking about the digital service tax, because I was paying it when I would be running Google ads, and then Trump got Canada to drop the digital service tax, and then I actually got a bit of a refund from Google, which I thought was hilarious because the US doesn't charge us the digital service tax, and I'm forever grateful for that because it makes me feel like a US employee, but I don't got to deal with any of the US tax bullshit. I just bring the US dollars in here and no one says anything. Again, it's legal, right? Yeah, Dodgers, go Dodgers. I was like, most disappointing. I don't watch sports, but I think everybody was watching that baseball game, man. And I gotta say, it was good camaraderie. It was really nice seeing, like, I mean, it was probably one of the most iconic baseball games you probably could have watched. At least that's what everyone's saying. And it was just such a nail biter the whole way through. But anyways, guys, I just want to reiterate, though, there's something peculiar going on. And I just want to re-clear up kind of the confusion around this, because I always hate, like, I'm a bit of a patriot, okay? I grew up here. What are you going to say? It's like if you live in America, like, I mean, my whole life's been here. Toronto's my backyard. I built my career here, from magicianing to like this finance stuff. You know, I'm going to support Canada and try and, like, you know, make this place a better place no matter what I can do. And I'm always just tired of the negativity, tired of the pessimism out there. I wish people had more hope and more aspirations and just looked at everything from like a glass half full perspective, because you can't see opportunity unless you're looking for it. So if you're just looking at shit and you're feeling shit, that's all you're going to have in your life. So I'm looking at the Canadian economy, and there's just still this constant conversation going on about like this recession and GDP, and everyone's just kind of shocked, and they think the Canadian stock market's going to collapse. I honestly think, in fair argument, things are expensive. The Canadian markets are expensive. They're historically high. The US markets are historically high. Yes. The whole world is ballooning right now from an equity standpoint. So if you're in the markets, you're friggin' doing pretty well, especially if you're outside of Canada and the US, because China emerging markets have been nothing short of truly on an astonishing tear. But as people like to say, Canada is no longer competitive as a nation. Eventually, the stock market will reflect the growth in GDP and productivity. This is why the S&P 500 has gone up much more than markets in Europe, Asia in the last 20 years. And you're not wrong. But the problem is you can't look backwards to look forwards. And like I said, it's funny to me because you could have said last year, like, why would you invest in emerging markets? US tech is still going to be dominant. US tech has done great. Don't get me wrong. But emerging markets are up like, what, 30, 40% or something ridiculous. You can't predict the future, right? So you have to understand that economies can shift at the drop of a dime. And that's what's kind of happened to Canada in the last 5 years. Because you're zooming out on the 20-year scale. I'm going to try and look forward a little bit here, give some optimism, but I want to remind you, in the last 5 years, Canada has absolutely crushed and has kept the performance, and in some cases outpaced the United States. In the last 5 years, guys, if you take a look at VCE, which is the same equivalent for Canada's S&P 500 version, the last 5 years has annualized 17%. The S&P 500 over the last 5 years has annualized 16.4%. So if you, over the last 5 years, just invested in Canada and Canada alone, took advantage of all those juicy dividend tax credits we get, crushed it, maybe started a corporate, who knows, whatever you're doing. If you've been involved in the Canadian economy from an equity standpoint, you have done exceptionally well over the last 5 years. Keep in mind, over the last 5 years, we came out of a pandemic. A lot of weird stuff has been going on. But now if you look forward, you got to ask yourself, yes, GDP has slowed down. In what sectors is GDP slowing down? It's a question you got to ask yourself. A lot of it's related to tariffs. And yes, it is affecting a lot of companies, whether it's steel, farmers. There's going to be secular impacts. That's how, you know, it's just how it works. The problem is you can't be so egotistical to presume you can just understand how an entire economy functions, because I can. I've done exceptionally well over the last 11 years, and I know most of it's just to my ignorance. And I have one goal and one goal only, and that is to get exposure to the best possible companies in the world. That's all I've ever tried to do, and it's worked very well for me. But I can't tell you if, the economy is going to come collapsing down and we're going to head into a recession. It's going to tank the entire stock market, because the reality is we're going to go into a recession. We're probably already in one. But you know what's probably also going to remain true? The markets are probably going to stay at all-time highs. Why? Because secularity, like, you got to understand commodities, baby. I mean, you can think that tech is the next big revolution, but what if it's not tech? What if it's commodities? Why are commodities trading at ridiculous highs? Uranium, gold, silver, platinum, palladium, I don't know. Things have been just ballooning to ridiculous highs. And you know what country is one of the most rich countries in those commodities? Canada. Now, obviously, policy would be nice to loosen up on maybe some of these ESG, these compliances around like being able to mine and just getting the permitting done. Like, there's a lot of drag and policy around this stuff, but regardless, we have everything the world needs. So yeah, we do have some supply problems, when it comes to like the entire ecosystem behind how we've set it up with the United States. Is it going to be a bit of a hiccup and some bumps along the way? Are people going to lose their jobs? I mean, tech right now has the same amount of jobs as it had back in the 2008 financial crisis because of the layoffs. Like, there's technically a recession in tech, though tech is making a god awful amount of money. Someone's going to lose their job in steel. Maybe they can go work in mining. I don't know, guys. It's a very complicated ecosystem out there, but I'm just telling you, the bottom line is the bottom line. Gold companies are crushing it. The banks are crushing it. Yeah, there's just a lot of bottom line going on that just says, yeah, there's some problems out there. But if you look at the broad view of it from earnings standpoint, which again, earnings come from very different parts of the economy. And if the biggest company in the world is Apple and the entire US goes into recession, but everyone's still buying iPhones, Apple won't feel the recession, right? So you just got to be well aware of that and just try not to predict what the whole economy is going to do and then start investing based off of that. It's a very foolish thing to do. You're better off asking yourself, what are the best companies in Canada? How do I get exposure to them in a very efficient path of least resistant to return way? And then go look at other economies and figure out how to get the same exact exposure. Do that for 20 or 40 years and then come back to me and we'll have a conversation about what really happened with the economy, because I'm not here to play mental chess with you. I'm just here to make money, right? And diving into this here, guys. Hey, Kyle, would you ever consider living the Barista, FIRE life in the near future? So I've been watching some YouTube channels out there where people are starting to live their FIRE. They've actually reached their level of like financial retirement that they've worked for. They're living their new life. It's very intriguing to watch people make a transition, and it's a transition that I don't think I'm ever going to make personally. It's a weird conversation to be had right now because I'm living through a lens of anxiety in life. I like to work a lot, and it's my detriment to myself. So I'm a workaholic to the point where I've come to realize the way to efficiently get work done isn't to look at the broad view of it, because you're just going to cripple yourself with anxiety, but to focus on that one thing that matters in this moment and then move to the next thing and just keep doing that. And you'll be shocked at how much you get done in a year. But regardless, I would like to, however, do to some extent this level of living. This is probably the best way to kind of achieve FIRE. The Barista FIRE is a semi-retirement strategy where you save enough in investments to cover most of your essential expenses, but continue to work part-time in a lower stress job to cover the rest, such as health insurance or daily spending. I figure, when I get to the point, I just told the wife, I'm just like, look, I just don't want to be trapped in a position where like we really hate our jobs that much. And I told the wife, like, in a year or two, she can quit. Like, if she doesn't want to do her job, quit her job. But maybe she likes her independence. Her job's not that bad. She can keep doing it. If she wants to keep making money, we can spend the money, right? Like, donate a little bit more, do whatever. But I want to find fulfillment in life, and that definitely does not come from having a portfolio and doing nothing, right? I mean, half the journey and half the fun of this YouTube channel was 2019. I literally had $100,000. I was like, I'm starting a channel. I made a major milestone. Let's see where we end up from here. We're another 6 years deep since this channel started. I posted like a god awful amount of videos, stupid amount of videos, 1,500, a couple thousand, I don't know, stupid amount of videos, but I'm in a way better place, like a way better place than I was when I had that 100K. It's crazy how fast it's changed. And then I'm just thinking to myself, like, what do I want the next stage of that to look like? But it's not going to be like unemployment and just living off that capital. There's just no way. I'm trying to think of ideas for fulfillment. I know this channel might evolve in some new ways. I don't know. We'll see. We'll see what happens. But I'd love to know if you guys consider the same, because I've been seeing a lot of comments and questions about how to retire correctly and finding fulfillment in different things. Could you please talk about Nvidia? I think many interested in your opinion about the valuation compared to earnings and whether it's a play in the near term or long term. So Here's the thing. Nvidia scares the shit out of me. It always has. It's a very cyclical company. I don't understand chips. I don't think 90% of people understand chips, but right now everybody sounds like a genius because everybody's buying Nvidia and they're going to tell you to buy Nvidia, and I don't buy Nvidia. So I probably sound like a loser because I missed the absolute, crazy historic run. But I'm like Warren Buffett, guys. I really only play in fields that I truly understand. And regardless about how you feel, I've done well with Nvidia because it's the largest company in the S&P 500. S&P 500 is my biggest position. If Nvidia keeps crushing, I will keep crushing. If it doesn't crush, it'll de-weight its way out, and whatever comes in next will come in next. From a valuation standpoint, I'm here to tell you, in all honesty, Nvidia is cheap. I think Nvidia has a lot of opportunity beyond the United States still. I think if we can unlock China, which I don't know if that's ever going to happen, but if Trump just opens the doors so Nvidia could really just unload into China, I mean, we could easily see a doubling and a swelling of like a whole new growth era for Nvidia. But regardless about how you feel about what's going on today, you have to get an understanding of what's happening in 5 to 10 years from now. And the problem is I can't tell you what that is. However, when it comes to companies like Google and Meta, I can guarantee you in 5, 10 years, those businesses are going to be behemoths. Because I know what kids want to do today. Kids watch YouTube. They grow up on YouTube. That is their center of media. They want to be YouTube stars. Google's not going anywhere. They're the major companies investing in the infrastructure that is supporting Nvidia today. So Nvidia is selling the picks to the miners. The miners are Meta and Google. Meta and Google have such foundational businesses. They can support that kind of expenditure that no other business can into the future in perpetuities for as long as I can tell with the crazy amount of margins they've got. And regardless of what happens with AI in the future, they still have those moated businesses that aren't going anywhere, in my opinion. Now, that could change, but from my perspective, that's not going to change in 5 years. So I'm very confident placing a long-term bet on Google and Meta at the valuations they trade at today. Nvidia, again, might look cheap. Again, it might look cheap because of the growth rate that it has, but you have to understand that that business model is going to continue forever. And I don't believe it will. At least I just can't see it happening. I remember like a lot of people trust Jensen and the CEO, but go back and listen to this guy back when the crypto was booming. Like Nvidia was all into crypto. That's all Jensen was talking about. The crypto miners, it's the future, it's the currency, it's a this, it's a that, and NFTs, and it's going to be huge. He doesn't say an effing thing about crypto anymore, does he? So, I mean, that's the reality of business. Like, you have to evolve with whatever's coming next. And it's a very cyclical business. I personally like Taiwan Semiconductors a lot more, but those companies have also ballooned. And I get it. This is the oil of the 21st century. It's going to be doing well probably for a long time. I just couldn't put my finger on how long that is for. I mean, Meta and Google are already making their own AI chips. I don't know what that looks like in the future. I don't know what chips evolve into the future. Is there a new kind of chip Amazon makes? I don't know. Like one company could revolutionize something like quantum computing that completely disrupts what we're currently utilizing chips for to some varying degree that crushes the market. I don't know. It's not my business of play, right? So if you think you've got a dipped finger in that economy, then go for it. But as a pure play, adding it to my portfolio as a single stock just doesn't make sense for me because I wouldn't be able to hold on to it. It's a stock where if it dropped materially, I wouldn't know if it's time to buy the dip. If it's a stock that ballooned 1,000%, I don't know if it's time to take profit. I would probably just take a 20, 30% gain in a year and get out and miss the insane rally. Like, I'm just not that confident with it, right? It's why I was able to make like a 40, 50% gain on Google this year, take some profit on it and go long the rest. I'm very confident in Google. Like I said, how confident are you in these business models? Really like your videos. I'm retired and would suggest that rather than focusing entirely on retirement planning, most folks would be better off being obsessed with finding a profession, career, or job that gives them fulfillment, however you want to define that. You'll remember that great experience you had and the people you met when you are rocking the chair on your porch in your senior years. Working as a huge part of your life and enjoying it and not continuously trying to escape it makes more sense. And this is, again, comes back to that point of this whole FIRE journey. I feel like most people just get bored in retirement. I've been lucky to have found a great career that gave me both financial freedom in retirement, but also incredible experiences. I think one should try and find both. And I think this is harder and harder. And I think most of my anxiety and stress comes from the reality of like major job shifting and inflections. Because I wish I was like one of those people that just became a heart surgeon or just found like a crazy, like stable level of employment that has such great impact on people's lives. Because I feel like that's what keeps you going. I mean, just the idea of just, making decent money and just, helping people in your community is like the best feeling in the world. But these days, I think it's harder and harder for a lot of people to feel that way. with the struggles of just like maintaining income. And I'm still in that income phase. Like, as much as I like doing this YouTube channel and I get a lot of reward about the guys that come on and do this one-on-one with me, and I get to like actually meet some of you on the back end of the screen, come into my chat groups and all that, like that's where the rewarding aspect of it is, seeing the impact of the community. But at the same breath, like I'm here to make money, guys. Like I'm here to try and meet my goals, my short-term goals, and put myself in a position that I want to be in. And I'm doing that very aggressively. If you watch the channel and you see the sponsors and the work that I'm doing at my actual job, and like, I'm really grinding it out here, working like a lot longer than 8 hours, starting to work a lot longer than what feels like 8-hour days. I'm working on Sundays now. I'm like, I'm always just itching in work somewhere because like I'm lucky enough to get like these private contracts that I'm usually doing after 5 o'clock, but like I'm starting to realize that it's a lot and it's overwhelming. But I'll deal with it for now because I'm a G and I'm trying to, take advantage, make hay while the sun is shining, as they so say. Bro, what happened to the weekly live streams? I haven't done one in a month. So this is a very good onslaught to the question here. Hopefully I've been sharing my screen. These have been really good questions. But bro, what have happened to the weekly live streams, man? So I'll try and bring some of these back. But again, that comes back to the statement that I was just making, that it's incredibly hard to do what I'm doing, while also wanting to actually live a comfortable, like relaxing life with my wife. I'm like, I get tired of working nonstop. So when it came to live streams, I took a break this month because of the amount of other work that I've got. But yeah, we'll try and bring them back here and there. I still like doing them. But what are you guys saying? I would love you to check this US stock, TPL, Texas Pacific Land Corp. The margins are insane. Basically no debt in the stock is down. TPL, yeah, let's take a quick look. Why not, guys? I'm hoping I'm sharing my screen here because I keep finding I leave my face up. My ugly mug here you got to put up with. Texas Pacific Land Corp. Stock's down 20%. Looks like they've been doing pretty good over the long term. Can't complain. 5-year returns, 400-500%. My God, what does this company do? Pacific Land Corporation is a publicly traded real estate operating company with its administrative office in Dallas, Texas, owning over 880,000 acres in 20 West Texas counties. What is it, like a farming company? Or are they like a variety of real estate? What are they doing here? Let's take a look at their financials real quick. Company went a little bit of volatility, not too bad. 450,000, or sorry, million. I'm saying thousand. 450 million to 705 million over the last few years. Not bad. What are they doing in 2025? 187 million. So that's probably why the stock dropped. They did 195 million to 187, bit of a drop off quarter over quarter, but still growth over 2024. Gross profit still pretty strong overall. Yeah, it looks pretty good. Balance sheet, you said they got minimal debt. Yeah, 115 million, 1.1 billion in assets. What's the company's statistics here? Let's just take a quick peek. We're talking about a company with decent revenue, profit margins, really high profit margins. My God, what is this company doing to make 60% margins? Jesus, those are getting up to like Nvidia level margins, man. That's higher than, that's high. That's some pretty crazy margins. Institutionally held, so should offer some stability there. Yeah, it looks like a pretty good company overall. Have to deep dive a little farther. Is it a small cap? What's the market cap on this guy? Be curious to see. It's probably a bit of a smaller cap because most stocks, 21 billion. Not a bad stock. Probably worth the 47 PE that it's trading at today. All in all, not bad. For those that are interested, maybe we can do a deeper dive. Why not? Canada makes like 60K US, laughed my ass off. Canada pharmacists make like 60K USD, while USA makes 150K USD. Hey guys, I wish nothing but the best week for you maniacs. Yeah, so do I. I hope you all are doing very well. How would you rank all the tax advantaged accounts? TFSA, 100% number one. RSP is debatable. I think I prioritize an RSP pretty seriously, but I'm also in a higher bracket, so it makes more sense for me to utilize it. But if you're only making like 50K a year, it's hard to justify utilizing an RSP because regardless, when you pull that capital out, it's nice having that initial tax savings so you can invest it and get that compound return. But the reality remains that if you're going to pull it out later in life and you're already in a 50K bracket, I would still prioritize a TFSA until you've maxed the TFSA and then move over to the RSP. FHSA, also very great. You want to really focus on getting those three maxed out before doing anything else. Once you've maxed out your TFSA, your RSP, your FHSA, from thereafter, you're really just playing the field of, I need to buy real estate at some point. That's why we're utilizing the FHSA. How do I get to that point in my life? I should be starting a side hustle. How do I take advantage of write-offs, tax deductions, maybe starting a sole proprietorship? Those are the ways I would kind of go about doing it. But again, it takes a long time, right? Like none of that happens overnight. So just don't overwhelm yourself with it and just start with what you can start with. Is it too late for gold now? China drops the tax cuts. Yeah, gold, what's it doing right now? Me and my mom are betting that it's going to tank pretty bad at some point. Let's take a good look. I can't you have to imagine like we're in a cyclical cycle. Commodities go through cyclicalities pretty often. And I mean, gold dropped down. Oh, it's under 4,000 an ounce, coming into Monday here. So what's going on is the central banks like China are bolstering their treasuries pretty aggressively with gold. But the reality is that's a lot of demand where the supply is kind of constrained. So it's driven up the price kind of artificially, which is great for the miners, right? But then you have to imagine you're a gold miner and you're telling yourself, holy crap, we're living in an era right now. Get out of here. No, I don't want any of that crap. Get out of here. Get out of here with your spam. I'm not signing up. Yeah, so you got to imagine, right? Like all the miners out there are so excited, they're giddy, they're over the moon, and they're going to be like doing everything they can to get every ounce out of the ground possible because they know this isn't a guaranteed. So they're going to be flooding the market as much as they possibly can. And if China decides the central banks cut back, I mean, you could really start seeing supply start to strip away some of the demand, right? And yeah, you could start seeing gold correct. I wouldn't be surprised if it drops 10, 20, 30% or more. I mean, it's already dropped, 10%. I mean, look at that. From 4,400 to under 4,000 is a 10% drop. It's a pretty material drop just over a few days, just over a week. I mean, it could get a lot worse, right? So I don't chase this stuff. To be honest, if you're in gold, like I told you, the smartest thing you could have done is just, hey, go set a stop loss on some of the biggest gold companies and just keep riding it up and keep resetting your stop loss. So when this 10% drop happens, you just exit and just ride it until it ends. And this could be the end. If you're late to the party, I don't know what to tell you. Precious metals are one of those things you just have to love to be in it. I don't really care for it. So I'm not like overly involved, but I get it. Like there's a lot of money to be made. A lot of juniors, a lot of exploration companies are going to be crushing it right now. So gold and gold miners could correct 20% and I'm still up 80. Yeah, that's the thing, right? The idea is catch it early enough, ride it up, and then just once it starts to falter, get out. I wouldn't, or take profit at least. Like don't leave it on the table. If you made 80% in a year, man, take profit and diversify that. That's how you get rich. Everyone in tech is jumping on AI bandwagon, even if they don't have enough data for that execution. AI learning without data is meaningless. Regardless about how you feel, AI is a bubble. It's a definite bubble. There's no like arguing that. I think at this point, it's just like every new sector, guys. Like crypto, when it was booming in 2021, like tons of companies went bankrupt. Same thing's going to happen with AI. 90% of them aren't going to be around in 10 years. We'll see who wins. I mean, you remember MySpace? Like Facebook won the social media game along with Google for the most part. TikTok is an exception, but like MySpace, there was Skype. Remember Skype, MSN? Like, I mean, all those were social media businesses that don't exist anymore. Same thing's going to happen with AI. And to be fair, I'm really scared for the small companies. I was really impressed with like the video editors out there, like these really small companies that have software editors and all this stuff. But I don't even know how Adobe is going to compete in this future. Like, you can't compete with Google and Apple. Like these companies have so much money to spend and they're going to make such better models than you're going to make. And they could easily, if they wanted to, make an editing software tomorrow and they would crush you. Like I'm really worried for the small guys because it's just really hard to compete in that game right now. That's why it's so easy to bet on like the mega cap companies right now that are investing in it, like Amazon and Google and that. Because like you can't really lose. Like you have a foundational business and all the upside. If you're playing the little guy, you got the risk of the big upside, but those little guys can 1000x, but just as quickly, I mean, these companies could get squashed. Going to get back and do take two sometime here. Yeah, I've been debating it. I look at it pretty regularly. It's trading down a little bit right now. Everyone keeps asking me, but there's no updates I can give you. I mean, I just kind of want to be in it before the hype comes. I'm probably not going to hold it for earnings, but I might buy it back here closer to next year. I was thinking about picking up a position before the end of the year, just a speculative one. I just don't want to be in it while we're trading at highs here, because if we do go into some economic hiccup, this thing could drop like it has in the past. I mean, it's not unusual for a stock like this to drop pretty heavy, but I'm really hoping, and I'm still betting. I don't care about earnings. I don't care about the fundamentals. I just think everyone and their grandmother is going to be piling into GTA 6. I think it's going to literally shift the economy. I think people are going to stay home from work and school to get this game. I think people are desperate for a good game. And I think it's going to be the most valued piece of media entertainment ever produced ever. And I don't know if it's going to be justified in the stock at this value or not. But what I do know is that hype comes with expectations, and people are going to want to get on that hype train, and they're going to drive the stock up even higher. But again, I had too much risk with it. I was owning too many individual stocks, but I'm still going to play it. I'll play it a little bit more and try and make another 20 or 30% or maybe more off of it. It's at a $47 billion market cap. My expectation is it should be trading between 60 and 80 at minimum. But I honestly wouldn't be surprised if it runs over 100. Come back to this video. Well, let's watch. Next May when GTA drops, let's see if we're trading closer to 100 bill. I would not be surprised. I'm not going to play options on it, though. I don't have the balls for that. But somebody will. I can promise you that. There's going to be people that are going to be driving options like there's no tomorrow when this rocket ship starts to take off. Gold is, yeah, Kraken. I know there's you and your Kraken, man. You just can't get past this robotics company, eh? Let's take a quick look at it. Kraken Robotics. Yeah, let's take a quick look here. How are we doing year to date? My God, up 146%. Did you ever get lucky with this one, eh? My God, probably one of the only like functioning robotics companies today. Let's take a look at their products real quick. I feel like robots right now is just like the Tesla Roadster. It's like the most overhyped like crap on the market today. It has no justification at all today. People are just like losing their minds about it. But yeah, these companies, I like the companies that are building like real world power, C-Power batteries, Catfish, Toad, SAS, Kraken here, like really cool stuff, man. Like LiDAR. Look at this, like a company that's actually using real world stuff. What are the revenues looking like? Are they actually making like real decent money right now? I haven't looked in a while here. Let's take a look. Probably still a bit of a growth company, I imagine. But oh yeah, look at that, growing pretty nicely, eh? Let's take a look here. Yeah, I mean, from 19 billion to 26 billion year over year is not bad growth. Here's a real robotics company that's actually doing something with robots. You can't complain about that. Gold is primarily deleveraging and on the realization that we might not have Fed independence come February. I'm long gold, small portfolio. Just be careful. Things get, like I said, you guys just have to be real careful, right? Like, I don't like the hype train. I've been through the hype train over and over again, and it's always the same story over and over again, guys. If you get late to the hype train, your rate of return drops precipitously. I think Ben Felix did a really good job talking about it. Like anybody that like starts chasing stocks, and I'm going to say it again, hate me for it. I could be wrong. Palantir, Nvidia. I mean, there's so many stocks that are so hyped, guys, that when you buy them in the latter half of the cycle, like years into it, like you have to imagine that it's just going to be that much harder for the company to do something again in the next 5 years. And it's so much easier to find companies that people don't like. Like the easiest strategy that I found in the market is when people are scared and people are telling you that the world is ending, when your mom's calling you up, asking you what's going on in the market, and your friends are like, what's happening? My portfolio is down 20%. That is where I've gotten rich every single time, 100% of the time. The pandemic, the whole reason I was able to buy a condo in Toronto was because of the pandemic. Because when everybody was flipping out, I was just throwing god-awful amount, tens of thousands of dollars. My fiance wasn't investing that seriously, and then I made her invest. The third week of March, she was buying Meta. She was buying all these stocks. I was leveraging capital for the first time in my life. I was borrowing money from a line of credit because I lost my job while I was living at home, taking government subsidies because I was unemployed. But my God, I was making advantage of that unemployment. And God, did it work out. I'm just saying, like, look at the Terraform, the 2022 crash. Every single time, Google drop, Meta drop. Every time these stocks drop, and you just like, look, I understand this, and it's just so easy to make money off of it. I just can't get over my RSP is up. My S&P 500 position is up like 25% right now, all because I was like, look, I'm not going to bet on SCHD in this collapse. Like, just sold SCHD, put it all in the S&P. Up 25% on an index in a single year. That's a $25,000 return on a $100,000 investment in 1 year. God, that's a lot of money for something that just seems so silly obvious to me. But again, you have to figure out what's obvious to you, right? Like what's obvious to me might not be obvious to you. So you just have to be aware of it. I got a few calls focusing on 260 September 2026 for take two. Oh my God, Bombardier, is that having a comeback now? No way. I remember this stock was this used to be like a Canadian darling, and then it just got absolutely destroyed. What are we doing here? Bombardier, oh my Lord, 100% year to date. Has it really had that much of a comeback? Yeah, I guess we're in recovery mode, eh? Look at that, bringing back 5 years of a drop. Oh my God, like it got plummeted coming out of 2019. Yeah, I mean, congrats. Like when everyone hated it, here we go again, like another great example. And this doesn't work 100% of the time. Obviously, with individual stocks, you're playing a bit of a different game. But man, everybody hated Bombardier. And look at it now. If you were buying it from 2020 onward, you've done exceptionally well, 1,000% returns on a stock that people hated. But again, I mean, in the other spectrum, like Algonquin Power and Utility Corp, here's a stock that is yet to recover from its plummet. But maybe this is the time to be buying it, right? I mean, that's what happened to what, 3M? There's a lot of stocks that are looking like that right now. But I mean, 3M starting to pull out of its recovery mode after it got absolutely devastated. You remember GEO Group? Like there was another funny one that just got like absolutely destroyed. GEO Group, I mean, it's plummeting now. Obviously, it's had its kind of day here, but if you're buying it in 2022, you're still up. You've pretty much, almost doubled, tripled your money. What's another good one? Like BTI was a favorite of mine. I'm glad I bought it for my parents in retirement. This one absolutely crushed. I mean, yeah, you bought this anytime in the last 5 years. You've done pretty well with that exuberated dividend that reached, I think, a high of like 10% or something. I think my parents got like a 10 or 11% yield on British American tobacco, which was insane. But yeah, I mean, I always feel like this is the easiest play. Like if you have the stomach and you're looking for 3 to 5 years, which is my minimum, I usually don't look at stocks in the short term. I'm always like anything I'm buying at least 3 to 5 years. So I feel like Starbucks might be one of those companies right now. Who knows? But it's an interesting way to play the markets. I always just feel like it's the easiest way for me anyways. Give me that 31 bill MC to the 1 trill in the 5 years. Got 80% NBIS, all in NBIS. What's that one? NBIS. Let's take a look. Nubius, one that I'm not too familiar with, but it is up substantially. It's a recent IPO. Nubius Group, headquartered in Amsterdam, is a technology company that provides artificial intelligence infrastructure. Yeah, the infrastructure plays have absolutely crushed it two-way. That's like Oracle. I mean, has Oracle retraced ever since it went like parabolic there? Let's take a quick look. How's Oracle doing? Oracle is up still pretty massively. It hasn't dropped too much since that spike, 20% drop. But yeah, look at that. 60 PE. The infrastructure companies, I think, are also a very interesting way to play AI because at least it's a little bit cushioned, I think, to some extent. I'd still prefer the pure plays, though. I really like the companies that are utilizing the chips. You got to admit, like, you're using AI in your life. No matter what happens to Nvidia hereafter, those companies that you're utilizing, like Gemini, ChatGPT, those companies, man, those are the real plays, man. They're gonna be printing here in a while. APLD is another data center infrastructure play. Very nice. So I was thinking too, like, do you guys think it's worth playing the utilities? I've been really debating, and I keep saying this, and I think I'm going to do it here soon. I've been looking at things like Hydro One for my area, not necessarily what I would call like an AI play. But if you drive around Ontario, it's like it's one of the fastest expanding provinces. And like, it's just a huge economy, right? Like Toronto's the major city, the metropolitan area here. And I see so much development going on, and like, it's just a stable way of collecting income. But over, say, things like, putting aside like my preferences to my province here and just what I see going on, when it comes to the AI side, guys, I would say avoid things like Oklo. I know a lot of people like the idea of the modular reactors, but I just don't feel like these are the prevalent plays at this point. I mean, God, it's up so much already. I'm looking at things like Southern Company and like utility ETFs because like these companies are going to benefit greatly from this regardless. They're so stable. Year to date, 15% plus 3% dividend. These companies are nuclear reactor plays. Some of them are partnering. Like, I think TransAlta, is that the one in Canada that's partnering with some of the data and AI centers? I think it's TransAlta, isn't it? Like, here's another play you could do in Canada for like an AI, energy play. There's a lot of good stocks out there, and I honestly think I would like to look at some more of the foundational energy stocks to offer my portfolio some stability moving forward, whether it's like through an ETF or just some individual plays. I've always liked the utility sector. It's just such I think it's a really good sector overall. Not Oklo, GE, Vernova. Yeah, I feel like you can't lose on them. Like, you just can't. Because like these data centers alone, forget the data centers, like a lot of these economies are still expanding like pretty dramatically, and they have pretty stable like total addressable markets over time. Over any other industry, I don't think there's many industries as stable, and especially with this onslaught of interest rate cuts, I think I would rather pick the utility space for the interest rate cut recovery than the real estate side of it. But I will do a video on REITs at some point soon too. I think there's a lot of interesting REITs still that could be good plays. Power will be the next play for sure, Kyle. Yeah. I mean, it's on my mind. I think it's underappreciated when you look at the broader like energy sector, because right now people are just like so hyper focused on like nuclear and this and that. And I'm like, why isn't anyone just talking about like the broader sector as a whole? Like our economies are still booming. Like, I mean, we're going through some cyclicalities, but regardless, like immigration will pick up again in Canada. Development is going through the roof. When I'm driving to like the outskirts of Markham, I mean, there's massive property developments. Like the energy demand is going to keep going up regardless. But now with AI and just like everything else, like the power demand with electric vehicles and like, I just like, I'm thinking to myself, I'm like, man, like Jesus, like I don't know what I should look up what's the expectations for power anyways. And let's see what Gemini says about it. Like what kind of gigawatts we going to be pulling here in the future? What is the growth expectations for the TAM of energy in the United States come 2030? Let's just take a quick peek here and see what it says. What are we talking about? What kind of growth are we talking about here? I should look up the Geiger. So significant surge. U.S. electricity demand is expected to grow by 25% by 2030 from the 2023 levels. This is a dramatic increase from the historical trend. I think it's going to be even crazier than that. Reaching aggressive clean energy targets. Major companies are doing most of the clean energy now because a lot of the other ones struggled a lot. But I think you could just pick a nice basket of a few good energy companies that have diversity in nuclear power and like green energy. I still think that could be considered utilities. Like Enbridge, I think, is also a fairly decent energy play. But the investment is increasing adoption with battery. Yeah, like I mean, even think like battery energy storage. Yeah, the energy sector is going to be so interesting to watch. I think it's probably the most interesting, next to probably the AI plays. But yeah, the real way to make money is finding the next company under 30 billion MC and going to 300 billion. Yeah, I mean, we do that, right? Like this is the same with Aduro, a lot of the small caps, but they just come with a lot more risk. And it's just challenging, right? Like I feel like it's easier to, again, find stocks. Like I couldn't find a Palantir, like that just wasn't in my wheelhouse. I did find some good ones in the past, but it's hard. It's really hard to find. What you're talking about is a unicorn. When you're talking about finding 1,000x return stock, I've found how many in my life? 3, 4, 4. I've been like super lucky. Like I've won the lottery 3 or 4 times is the way I've looked at it. Canopy Growth Corp that was an easy one. I wish I went harder. The cannabis boom was so easy. But then there was like the psychedelic boom. I caught that one. Tesla, I caught. Apple, I had a good run on. I don't know if I think I got a 500 or 600% return. But yeah, definitely MindMed, Canopy Growth Corp, and Tesla were my 3 baggers, my unicorns where I caught the 1,000x run. But man, it's not easy. That's super hard. I would rather find stocks like Tesla when they plummet materially after some economic shift and then just pick them up, because the returns can still be just exemplified in a great way. It's so hard finding 1,000x. I mean, the last one was a Duro, I guess. Yeah, probably should throw a Duro in the mix. That one how much is a Duro up now? I've done pretty well on my shares. I've traded them around a little bit, but a Duro absolutely destroyed. That was definitely another unicorn of ours that we did really well with. But they're rare, man. I'm surprised how lucky I've been finding some of these. Aduro's up what? Yeah, 585%. We're not quite a unicorn, but we are still crushing it. But man, if you find 1,000x return, that's why on my spreadsheet I added those stocks, because I'm like, I want to find a way to frame them. They're not on this spreadsheet, but I do have them in my usual show. But I really want to not like, I know it's kind of like ego-y, but I mean, come on, how often, like in your career, it's like getting a degree. It's like, Jesus, like if I caught Palantir and I made that kind of a gain on it, like I want to frame it and just like put the trade up on my wall. It's like, they're so rare. Finding the next MindMed is hard, man. It's why I'm mostly indexes these days with a handful of stocks, because like I'm not trying to over leverage into anything crazy. I'm really just trying to, like I told you, like my strategy today is I just want to inch out a few extra percentage points a year. I'm not trying to I don't want my portfolio going up 50% a year, because that means I'm going to have to deal with crazy downside risk. But if I can just get market average returns and then just pick 2 or 3 stocks or 2 or 3 trades every 1 to 3 years, like Google and Meta and like Aduro or just whatever, and they give me those nice wins that give me those 2 or 3 extra percentage points a year, I'm going to be rich beyond my wildest dreams. I don't think people understand I'll finish up with this one quote, because I can't help myself when it comes to like the nerdiness of compound calculators. But this is where my brain goes to and why I understand that I don't need that much risk at the scale of my portfolio these days. is because of this, right? Like I said, so say you're sitting in my position, excluding my wife, my real estate, just talking about what I show publicly here. Let's just say I've got $540,000, or sorry, not additionally every year, but we have $540,000. And let's say we make over the next 10 years, we get market average returns. Let's just be modest at 10%, right? That would give me $1.4 million. Let's presume I'm able to squeeze out 12%. That's 1.6. Let's say I keep doing as well as I'm doing. The market returns 14% a year like it has. That means that could be worth 2 million. But let's say I end up making what I historically have closer to 18, 17%. That could be 2.5 million. I mean, if you get lucky, man, and you start getting into those 18% ranges, I mean, like I said, I could easily be worth anywhere from $2 to $3 million just without putting another dime in my portfolio and just having a couple good companies like Google and Meta. That's all it really takes. It's not a guarantee. Obviously, there's risk. There's going to be a lot of ups and downs that come into this, but I'm just saying a couple extra percentage points can change the entire outlook of your life if you're looking at the long scale of it, right? But on that note, folks, we'll see if we can do regular live streams again. If you appreciate it, let me know in that comment section below, because like I said, at some point here, this channel is going to be mixed and changed up a little bit. I'm going to try and not do as aggressive work as I'm doing, but who knows? Maybe we become a daily streamer. We're going to go down that path. I don't know if I could handle being daily streaming. I'm always a little scared because I get a little rambunctious, and you're one wrong quote away from blowing up your whole YouTube career these days. Not that I usually say things that are that left field unless you're a covered call investor. And if you want some entertainment value, I highly recommend going to the covered call video that I did because, whoo, baby, you want to talk about spice? You guys are crazy, man. I love the comments here. I didn't get too into it in this live stream, but maybe for the next one, we can talk more about the covered calls because you guys, man, the comments. I was showing my mom, and I'm just like, look at this. Look at the 152 comments. Man, these guys really get uptight when you poke a little bit of fun at the covered call investors out there, eh? And again, I major event streaming, yeah, maybe, but I'll remind you guys, just try not to get too caught up in the dividends. Try not to get too caught up in the fluff of all the hype of everything else, and just try and find the best companies in the world. Do part of it through indexing and just buy and hold for long periods of time. You'll probably do pretty good. But that's the best advice I'm going to give you at the end of the stream. So stay cool, stay awesome. And as always, we'll see what the markets bring tomorrow.